Ah, Congratulations, guys. Welcome to episode 3 of Exception Academy. And hey, finally about to get into it. You are finally taking the first step of learning what's going on the charts that we look at and that I'll show you each and every day. Today's going to be about candlesticks. Um, Honestly, as I was learning trading, learning how to do this, candlestick videos for like 8, 9, 10 minutes talking about candlesticks and then immediately getting into candlestick patterns and when I see this pattern, this is the entry I get into. I'm gonna send you all the misleading information right now. If the sole thing you are looking for, and this is what these videos don't tell you. If the sole thing of what you're looking for is a candlestick pattern, and that's deciding the entirety of your trade, you're gonna fail. I'm saying that because I did that. Oh, look at this pattern. Look what I can show you. Buy now, sell now. And don't do that. Please don't do that. But I'm gonna say that and write this stuff down. That is not enough to get you a um into a confident trade, into a successful trade. A simple candlestick pattern is not enough. I can guarantee you that. But before I even scare you with all of that, let's finally get into it. Take out your notebooks again, keep it right next to you, and write this down. So here we go, guys. I'm gonna put it on the chart so we can do some like side by side so you can see it happening in real time. These are candlesticks, guys. This is what you're going to see. I usually don't keep my candlestick green and red, but from the video and from what you're going to see, I want to make it super easy for you. So what we have here is the anatomy of a candlestick. What we're seeing every day, every second, every minute, every time we trade. So we're going to take this green one, for example, first. We're going to start on the left side with a bullish candle. Bullish means going up. It means upside. It means buy. That's bullish. That's bull. So look at here. This is a candle in its entirety. We have an absolute low, which is at the bottom of this wick. Wicks are your little sticks that's protruding from the body of the candle, the thick part of the candle. That's called your body. Your body is your green, the wide part. Your wicks, little skinny tails that's coming out of them. Even in the real market examples, right? You see how wicks are coming out of our candles? The skinny wicks coming out of the thick bodies. Those are your candles. Now we have a wick high and a wick low. So over time, for this candle, let's say it opened here, right? It opened, price was moving. It probably wicked low at a certain point, kept coming, wicked high, and then closed here, right? That's what can happen inside of this candle. That this is what this candle will look like. So like this would be that's super wide. This will be our body, the thick part. That's the body of our candle. Here, that would be our wick. That's how high we wicked up to on the top side, and this is how low we wick to. This is your fat, goofy, thick candle. That's what just happened. That's what's happening inside of here. So over time, this candle opened right here. Candle always open on a bullish candle, a candle that has closed higher than where it started. That's why it's green. Opened here, closed above where it started. Price went up from where it started. So whether this is a 1 minute, 5 minute, 10 minute, an hour candle over how that course of time, like this is a 15-minute chart. Across 15 minutes, this candle opened here and closed higher than where it started. So it's a green candle. Again, I really want to hone in on the simplistics because I want this to make sense. Let's take this candle here, right? This candle closed here. This green one, it opened here. It started. This is where price started. Look over to the right. It says prices at 28,843.75 over on the right side column. Closed around 29,000. It's higher than where it started. That's why that candle is green. Our wicks, again, it wicked as low as here. Small wick to the upside and closed there. It's exactly what we see. Opened here, went up, opened here, maybe started going lower, went up, went up, went up, went up, maybe got as high as here, and then finally closed. That's the body of wicks. Same for sell side. Bearish candle. Bearish means bears down, sell. This is red because if we flipped what we learned from the green candle, so this candle opened here, closed here, our next candle opened here and closed lower than where it started. So red candle is bearish. This video could be over right now. I'm really taking my time to make it as simple as possible. I'm not teaching you a bunch of garbage, a bunch of stuff that, oh yeah, just listen to me on this candle pattern. If this candle closes bigger than this candle, go buy. Don't. No. It's just simple candlestick anatomy. So now next time you open a chart, you're like, okay, this candle maybe wicked up that high, closed lower, it's red. This candle, same thing. I know that that's the body. I know that that's the wick. I know at some points price have gotten to those wick points, but closed in the body. Just like the buy side candle, this is what the sell side did, right? Started here. Maybe we even wicked up first. Maybe price went up first. Then we eventually started coming lower and lower. Got this low to our wick, but then closed about here. But price opened right here, right? That's our bearish candle. Let's say open there, close there, and we're gonna make, I didn't need to do that. I'm gonna make this red. This is what happened in that candlestick. And if this seems redundant, you can you can skip ahead. You can skip this video if you already have some experience within the market. But if not, I really want to emphasize what's going on here. So I do not want you to mess this up. Again, all of these lessons are going to be cumulative. If you don't understand it now, or if you don't understand this part, the next part won't make sense. The next part won't make sense. So this is showing what happened in this candle. It opened here, which is why it's our body. Wicked up at some point, price got this high, but it didn't stay up there. Came back down. Because remember what I said, if price has stayed up there, this candle will be green. Why? Because it's higher than where it started. This is our entry point. Let's emphasize that. Remember that, right? That was entry. That's where this candle opened up. I forgot everything, right? My screen is usually black. That's why all of my fonts are everything are in white, and I don't know how to spell. This is our entry, right? We close where? At the bottom. We close lower than our entry. That is why the body of this candle is red. Got as low as our wick here, but closed here. I really hope that makes sense. Please, if it don't make sense, leave any comment, concern, whatever that may be. For our bullish candles, our green candles, price closes higher than where we started. For our bearish candles, our red candles, price closed lower than where it started. Our wicks just represent the highest and lowest point of the candle, even though price didn't stay there. That's all. Again, more live examples. Crazy wick candle here, right? Look how small that body is. Price gap as low as here, but it's just a wick. That's not where that candle closed. It still closed just a smidge higher than where it started, which is why that candle is still green. Again, you can look at this on any time frame. Anytime. I know I just switched to the 1 minute, so candle's gonna get tiny. The time frames, what I just switched, the time frames just represent how long each candle takes to open and close. So when we were on the 15 minute, this candle would have had 15 minutes to open and close to show what it wants to do. So let's look at it in real time. This is happening right now. This candle has 25 seconds before it closes. As you can see, right now it is trading higher than where it started, which is why this candle is green. It got as low as this wick here and as high as the top side, the high wick. Let's see where this closes. We'll give it 3 seconds, see where it closes. And it closed green. Next candle starts where that candle ended. And again, it can enter, uh, it can close higher or lower than where it started. Now let's go to like a small of a time. That's too bad. We're not gonna do that. Just so where you can see it happening a little quicker. We're on the 15 second. We'll never use this time frame, but I want you to see this happening in real time. We use the 30 second. That should be better. Sometimes when you get to these small time frames, things can skip pretty heavily just because it's happening so fast. I just want you to see the candlestick, just see what's going on. We're wicking, forming bodies. This is the anatomy. This is what you'll see. So when we start getting into trades and entry models and things of that nature, again, I can reference the trade we took today. And again, you won't understand most of this yet, but I'm just showing you. I'm just showing you how these things will stack up because I'm going to teach you entry models. I'm going to teach you gaps. I'm going to teach you what all of that means. But just like here on our trade today, we waited for a gap, and you won't see. I won't explain that too deep. Waiting for a gap, price closed up. This nice, strong, bullish. Bullish means what? Green, green candle. We got in, and you just see candlesticks and wicks, candlesticks and wicks, candlesticks and wicks. You see all of that. And that is just one of the many things that make up what you're going to see on a daily basis. So I hope this video was very, very informative. Again, very simple. You half of you may understand what's going on within the first 5 minutes, and you don't have to watch the rest of it. If you already know candlesticks, this can just be a refresher. If it's not needed, then I will see you in the next one. But hey, guys, I'm not gonna sell you some weak candlestick pattern. I'm gonna tell you that this, oh, if you look at this candle here, every time you see this candle after this candle, it's gonna go up every time. Every time you see this candle, it's bigger than that candle. It's gonna go down every time. That's literally the type. It doesn't even make sense. And that's the type of stuff you see on social media every single day. Now, once you start stacking confluences, once A, B, C, D boxes are checked off, then that's fine because you have more reasons to get in the trades. This, this is the simple. This is the basic. That's it. You're hopefully now able to look at each chart, each candlestick, and be like, I know why that candle is green. I know why that candle is red. I know the little sticks sticking out of them are called wicks because while that candle was open, that's how low that candle got and closed above it. I know this candle started where this candle closed and it's green because it's higher than where it started. That's it. It's that simple. It is that simple. Thank you for being here, guys. Again, if you stayed all the way through, go ahead, like, comment, do whatever you gotta do to make sure you are grasping this information. Ask any questions. If not, congratulations. You made it through officially, not episode one, but step number one to learning and understanding what you're seeing and what I'm showing you on the charts each and every day. Hey, stay blessed, stay safe, and I will see you on the next one.